And finally, as the only powers to manipulate the cost or value of money or property are corruption of circulatory volume and or multiplication of artificial costs by interests. Thus, the integral solution of the first and third faults solves systemic manipulation of the cost or value of money or property, as the integral combination eradicates every power to do so. Section 7C, Lawful Authority to Monetize. The only lawful systematic authority to monetize promissory obligations shall be a common monetary foundry, or CMF, which shall comprise a vital branch of representative government, which shall be subject to all insurances, regulation, and criminal penalties necessary to a fact of absolute consensual representation, which shall abide strictly by the fundamental principles of mathematically perfected economy, the duties of which, in every reasonable case, shall extend every practical benefit of automation, and which duties, therefore, shall strictly be: 1. To certify creditworthiness according to agreed legitimate standards. 2. To issue qualified promissory notes to creditors upon performance of the promissory obligations of the creditor. 3. To maintain the accounts of the people. In other words, this common monetary foundry will do all of the things that banks do at virtually no cost whatsoever, but far more. You won't deposit your paycheck. It will automatically be deposited in your accounts. You won't have to pay your bills. They'll automatically be paid out of your accounts, etc. We'll discuss these things more when we discuss implementation in our next program. Well, 3, to maintain the accounts of the people. A, to apply agreed classes of depreciation to respective classes of debts. We will discuss depreciation in our further discussion of implementation. 3A1, wherein, unless otherwise stipulated, or until otherwise decided, a default method of determining consumption or depreciation across a practical lifespan of related property shall be: 2. To distribute payment of 35.5%. I'm stipulating a default method of determining depreciation, which actually polls have confirmed that is agreeable to the people that have examined it. 3A2, to distribute payment of 35.5% of the principal evenly over the first 12.5% of the proprietary determinant lifespan, which is, as I explained in last week's show, is the actual determinant lifespan for depreciating or paying a promissory obligation. 3A3, to thereafter have evenly paid 58% of the principal at conclusion of 25% of the proprietary determinant lifespan. 3A4, to thereafter have evenly paid 83% of the principal at conclusion of 50% of the proprietary determinant lifespan. 3A5, to thereafter have evenly paid 95.5% of the principal at conclusion of 75% of the proprietary determinant lifespan. 3A6, to thereafter have evenly paid 98.63% of the principal at 85.5% of the proprietary determinate lifespan. 3A7, and to thereafter have evenly paid 100% of the principal at conclusion of the projected proprietary determinate lifespan. 3B, in all cases, the CMF shall retire principal paid from circulation. Thus, by virtue of remaining obligation, remaining value of related property, and remaining circulation, ensuring and even maintaining an immutable inflation and deflation-free circulation, even without regulation. 4. The CMF shall provide ideal infrastructures for integration of modern commercial automation processes, that is, software. 5. The CMF shall accomplish all of these purposes at minimal cost and without taking profit, justly distributing cost according to willful consumption, comprehensive of dormant account activity, which shall suffer no accounting costs. Costs of preservation of records nonetheless may be incurred. Section 7D. Taxation, monetization of common services and infrastructures. The sole purpose and authority of taxation shall be to impose no more and no less than minimal, commensurable payment upon willful, voluntary consumers of actual and necessary assets, services, or infrastructures provided by existing, explicit, and conformant consent of the people. 1. Spending measures shall be financed according to mathematically perfected economy by the common monetary foundry, and shall be paid by consumers at the rate of consumption. In other words, this is what was wrong with the parable of perfect economy, as I told it, which everyone is following by saying money cannot be a debt, but it has to be an obligation, and we're providing the obligation, and we're actually giving you the reasons here why all money has to have an obligation attached to it, because that makes its life cycle parallel. The represented wealth and forces those who consume of it to pay for it commensurably, as we are describing here. 1a. Taxation shall exist only to fulfill resultant obligations to pay for consumption, and shall be levied proportionate to and solely for consensual consumption, by means which shall, to the greatest practical extent possible, fully automate compliant payment and fair distribution of costs, except 1A1, whereas in the case of publicly administered insurances, in which costs which are to be shared equally, proportionate to and solely for consensual consumption, shall be understood to mean the intended and assented manner of sharing minimized costs. 1b. Absolute minimization of cost shall be obligated in all spending and taxation measures, which shall provide for breach of this duty to be fully refunded together with potential punitive damages to the payers, from all parties receiving the proceeds of undue cost. There's vast ramifications of this in private and very undesirable purported privatization of everything from, well, we'll discuss this in an implementation. I imagine people will have, questions about that one, but that's a very important thing. Absolute minimization of costs shall be obligated in all spending and taxation measures, which shall provide for breach of this duty to be fully refunded, together with potential punitive damages to the payers, from all parties receiving the proceeds of undue cost. No more corrupt government for the purposes of taking from us. 2. Methods of taxation shall, to the greatest extent practical, eliminate or streamline all dutiful interaction of consumers in the means of payment. 2a. The general principle of this obligation shall be to associate the means of taxation with consumption of vital related products, that a uniform rate of tax on each related product shall distribute costs proportionate to consumption. For example, roadways may be paid for by fuel taxes so as to justly distribute proportionate costs, eliminating all overhead for the greatest possible number of consumers of roads. 2b. Appropriate costs of collection imposed by observation of this principle shall be considered: 1. Economy in the implementation of collection shall be subject to public scrutiny, assent, obligatory refinement, and punitive measures. 3. No taxation whatever shall be exercised as a regulatory device or against property, production, inheritance, gift, or income, and all claims of obligation to pay such taxation, however delinquent or otherwise ostensibly extended, are hereby rendered null and void. 4. All ostensible crimes against such ostensibly existent or bearing laws, therefore, however purportedly outstanding, are hereby forgiven and resolved. 5. Any breach of the principle of consent or imposition of redundant or unreasonable expense is non-enforceable and shall be severe criminal transgression of this act. Section 7E. Seizure of further offenses. 1. Government may neither dissolve nor seek to dissolve infrastructural assets of the people without first acquiring public assent of a lawful majority. 2. And may only seek to do so for the purpose of reimbursing the people for the full remaining value of duly terminated redundant infrastructures. 3. All prior attempts to do so by recognition of logical patterns of title and process, are hereby